Joining us now, Ed Yardeni, president of Yardeni Research. Ed, you've been optimistic. I won't even say cautiously optimistic. You've been optimistic. You think we may have seen the highs in the S&P, though, now for a while, but nothing to get too concerned about. Why?
Yeah, well, look, there's a lot of reasons why the market should churn, should move sideways here for a while. I think we've discounted that earnings are certainly doing well. The analysts are expecting that earnings will be up 8% on a year-over-year basis during this second quarter earnings season. We're expecting 10%. We think they're coming in reasonably well. In addition, I think the market's discounted the fact that the Fed will most likely cut the Fed funds rate in September. And that might be one and done. I mean, I know that there's a lot of people talking about more, but the economy's performing awfully well. But the big risks out there remain geopolitical. I mean, the crazy headlines today about Turkey threatening to invade Israel. I mean, just crazy stuff going on in the Middle East. And the market so far has just blown it off and focused on the domestic situation. But I'm watching it. It's unsettling. Let's put it that way.
I know that changes in direction for the Fed are significant, but one cut, and then you've got the market's been doing pretty well, and if you believe in the wealth effect at all, and then maybe we've seen some indications of a softening in the labor market, but we just got that GDP number. We'll see what happens on this Friday, but they're almost locked into it. They've promised. They talk so much, and they give so much guidance that now we're like counting on getting something that doesn't even matter. And if we don't get it, we're going to be disappointed. But what's a quarter point anyway? It's just weird that we're so focused on something that may or may not happen. I don't see why they should do it either.
I think weird is the correct word here, because we've got an economy that's generating solid GDP growth. We got inflation coming down. Inflation's come down without a recession. It was widely thought that a recession would be necessary to bring inflation down. We've gotten through that narrow path of inflation coming down without a recession here. And the Fed, for some reason, has signaled that they are definitely going to deliver us a quarter point cut in September, when it may not actually be necessary. And we had something that felt like a melt up until July 16th, which was the all-time record high in the S&P 500. I don't think we want to go there again by having the Fed be too aggressively easy when the economy doesn't need it.
Well, the one thing about a cut is that it definitely, but they could always go back up. But it means that we're not going. The next move is not going to be a hike, which. Even though it's only a quarter point, at least that takes that off the table. But do you get the notion that the Fed, different than last time they stayed too long, could they be staying too long at these restrictive levels? Is there any way there's something brewing, trouble in the labor market that we don't know about, and all of a sudden it really comes on us quickly so that they're too late? Is that possible?
Yeah, well, look, it's certainly possible. But the fact of the matter is the labor market remains solid. When you talk about restrictive interest rates, I agree that they've gone from a Fed funds rate of 0 to 5.25% to 5.5%, and that seems very restrictive. But they started with 0. The real abnormality was 0. It wasn't 5.25% to 5.5%. I think they've actually normalized interest rates, and the economy's demonstrated that these are normal interest rates for an economy that can certainly deal with these rates with inflation still coming down. So why mess with success? I mean, everything is going pretty well here. Why is it necessary to cut the Fed funds rate? But look, doesn't matter what I think. They're going to do it.
Right. But you're not that impressed yet with the small cap rally. Right? We talk about it a lot. Everything else has hit highs, but the Russell has not hit new highs. So will it get to the point where the rotation will be complete and the small caps will catch up, or has it been disappointing and that makes you suspect?
Well, I think the problem with the small caps is that the earnings have been flat for the past 2 years. Usually when the economy is growing, which is what it's been doing, small cap earnings do very well. But, you know, I think there may be a structural problem in the small cap marketplace, and that is a lot of the really good companies get bought out before they go public. And they get bought out by the large caps that have a lot of cash and have basically investment banking departments in-house that are constantly looking for really good opportunities to expand their business. So, you know, I don't know if we're ever going to get another Microsoft. You know, it's hard to imagine that a small private company is going to go public and become a next Microsoft, because Microsoft will probably buy them somewhere along the way, either before they go public or soon after.